What
I got Andy with me today. Everyone on the website who's a member knows who he is because he writes the Chart Wizard section on the website. We've been trading together for years now, since when, 1998 or so.
Yeah, about 98, 99.
So,
Yeah.
what do you think of the market now? Do you see any similarities to the past, or a lot of people are saying that this is the start of a new bull market. This rally since we've had in March is going to turn into something even bigger going to the end of the year, maybe through the election.
Well, I'm not sure about that, Mike. To be honest with you, I see a lot of similarities between the last bear market that we had. The markets, basically broke down in January, and all the long-term moving averages are curling over top. And the market now, since January, February, has just put on a really nice bounce. And basically, we were overbought, and I'd probably use this as a selling opportunity versus a buying opportunity.
So you don't believe it's a new bull market? Why not?
Well,
what can I do to convince you?
Well, I tell you what,
I'm not convinced. I'm just speaking as a devil's advocate. But
yeah, we'll keep it kind of simple. If the market were to pull back right here and not make new lows and base out for 6 months, and if I saw the market in the long-term moving averages base out and where they flatten out, and the market was in a position to break back through the long-term moving averages, then you would have to believe that there's a possibility that we're going to enter another bull leg. But until you see that happen, and we're still in a bear market.
So in other words, you would need to see the market base out more and then break out.
Yes. Exactly.
In order to show that it's a new bull market.
Yeah, exactly. You remember back in 2002, 2003, the market actually done a double bottom, and but over the course of that, it was probably about six to 10 months it took the market.
Yeah, almost a whole year.
Exactly, and that's the kind of time frame that you need to see the market base out before you're going to see the market, get in a position that it can get back above its long-term moving averages. And the long-term moving average is pointing upwards.
Well, that's like some of the indicators that we follow, such as the advanced decline line, for instance. Right now, the NASDAQ has led the rally. The NASDAQ index, NASDAQ 100. But if you look at the advanced decline line for the NASDAQ, it's barely gone up. It didn't even break out above its February high. And you can find the advanced decline line on stock charts. Go to stockcharts.com and hit market breadth, and you'll see all the advanced decline line charts. In fact, there's one for the ratio of highs to lows, and just the other day it made a new low 2 days ago. It's probably doing it today too, since the market's down. But the thing is, back in 2003, when the market broke out and started a cyclical bull market, the advanced decline line broke out along with it.
Exactly.
And so did this new highs to lows thing. And those things aren't doing that now. In fact, they topped out ahead of the market, I think in May, February, something like that, for the New York Stock Exchange advanced decline line. But the point is, those are things, just like you said, it takes 6 months or whatever. If the market's really bottom, they're going to take time to base out, and probably the odds are the market hasn't even bottomed.
Mike, that's exactly right. And anybody can be wrong, and everybody's got an opinion. And basically, my opinion's 100% that we're going to make new lows. But that's my opinion. You can ask 100 people, and 50 of them will tell you, the worst of this drop is over, and we're going up. And then you can ask the other 50, 40 of them are undecided, and they don't know. And then you get a few people that say, hey, we're going to make new lows. Well, I'm 100% pretty much sure we're going to make new lows. And not only do I just, I stick to the technical analysis part of it, it's just, I've been through bear markets, and I've traded bull markets, and I just know what to expect, and I know what things look like. And I believe this is a time to be selling stocks. We've had a nice little bounce, and I was hoping that we could get more bounce out of this thing, because I wanted a chance to short it, and I haven't been able to get in the market and short it because we did do a little double bottom here, and the market just broke out of the consolidation range that we've been in for 2-3 months, and I thought we'd get a little more upside. And here we are this week, we're breaking down. Already. Now, we talked yesterday, and I told you, I said, hey, look at this thing. Market ain't but, just 4 or 5 percentage points off of its lows. Before you could turn around, we could be on our lows, and then what do you got?
Well, so far that's one big difference between the market now and the last bear market is you had 3 major rallies where the market went up over 10%, I think like 15% or something, and it'd go up to the 200-day moving average and through it for a week or so. And this time we haven't even done that yet.
You know, Mike, that's a good point. You know, I'm just sitting here on the sidelines waiting for the market to get overbought. And on the short term, the market is overbought. But I haven't seen any excitement in the market. And usually, even in a bear market, you get bounces that, you know, they rocket up, you know, and they pull, they consolidate, and they go higher, and they keep going higher, and everybody on TV gets all pumped up, and everybody thinks it's over. And the market gets extremely overbought quickly. It doesn't take long. Well, this time, you know, we're struggling. You know, we got a little double bottom put in, which is somewhat manipulated, you know, fed, and not going into all that. But, you know, just looking at the market a week ago, 2 weeks ago, I would have bet that the market was going to break through its 150s. You know, 150-day moving average is coming down. We'd spike up a little bit. Everybody would get really excited. That's it. We can't even get it to do that. You know, this market's struggling. And, you know, it could get really bad. It's a time to be selling stocks, not buying.
Yeah. Soon, one day we'll be buying them, though.
Yeah.
I mean, I do think some sectors, obviously the oil's doing well. You know, I don't know if I'd buy them now. They've gone up so much, and but oil's clearly in a bull market. So I would think if that pulls back, maybe that will provide a buying opportunity.
It possibly will, Mike. You know, I see oil this way. I mean, if you overlap oil with the actual general market over the past 3-4 years, a lot of times you'll see oil will pull back and fall. It's in a really nice channel, you know, bull market channel. And a lot of times you see the oil stocks, you know, or the oil sector and oil itself, at the top part of its channel, the market is struggling, the market starts to fall. What happens? The oil stocks pull back to the lower part of the channel.
That's basically what happened in January.
Yeah, exactly, and it just keeps repeating itself. Now that will continue to go on until the commodities bull market's probably over with. It'll put in a major top. Could it be a major top here? Sure, it could be. You know, nobody really knows that until 6 months from now. But yeah, that's probably I wouldn't be buying oil stocks now. And I know oil's a lot, it's making the news every day. It's all pumped up. Everybody's, I was just on the computer this morning looking at some promotional sites and this, and all they're doing is promoting oil stocks. Everybody's got oil stocks on their buy list. And that's when you want to be selling oil stocks and waiting for them to get oversold again. And, when we see them at the lower part of the channel, that's possible that'd be an opportunity, but that'll probably be the same time you see the general markets having some type of a washout themselves, making new lows from the January, March lows, February lows, actually, falling. There's a panic in the market, the volatility will spike, and that'll lead to an opportunity to either play a bounce in the market or, possibly playing another move in the oil stocks. And other commodity stocks also, because they probably will pull back to their lower channel. They're really volatile, really fast. So to me, it's a time to be selling.
Or be real patient.
Patience in this market is key. It's key.
Well, the problem is, you watch the TV, and we know it's very difficult for people to be patient. It's one thing for an individual investor to be patient, but it's also another thing for someone who's managing money, a stockbroker, a mutual fund manager, or hedge fund manager, whatever. They're not paid to be patient. If they're patient, like I'll tell you a story. A guy I was talking to, I think just last week, he's a stockbroker, and not around here, up New England somewhere. Anyway, he was telling me that one of his clients' accountants called him up on the phone a few weeks ago. They wanted to know why their client was in cash.
Yeah, he's going to be really happy. Well, this guy.
But that just shows you. I mean, like that's people like being patient is bad.
Well, a lot of times, you have a client like that, and they're actually watching TV at night, and these guys are telling them how great of a buying opportunity this is. He actually calls his broker, investment manager, any investment advisor, guy managing his account, and the guy tells him, we're in cash. Well, this guy, I mean, that's a contradiction. He's being all pumped up on TV, and this guy, he just doesn't understand. And in the long run, he'll be glad he was in cash. But you can't convince people of that. You try, and just like I did back in the the top of the market back in 2000, 2001. I tried to convince everybody, you know, all my close friends, my father, and everybody just looked at me kind of like I was crazy, you know. But in the long run, you know.
Well, people say, you know, the bear markets thrive on hope, that they last until all the hope's gone. And I think there's a lot of truth to that, because at the bottom, whenever you have bottoms, like even the last two, there's very little hope left, and when it finally ends, there's none. But you know, in the end, I think they also thrive on fear, and people, and it's not so much greed that causes the rallies, but it's fear of missing out. That what if the market's bottomed and I don't buy, and so forth. And I think that's what really fuels bear market rallies.
Well, that is very true, Mike, and even in this rally here, this rally's been really weak. I mean, I'm just sitting here and I keep my fingers crossed, because I want this thing to just move a little bit higher here so we can take some short positions. But this thing is really struggling. I hope that the pullback that we're seeing this week isn't the top in this bounce. I hope the market's able to base out right here and give me one more little surge up. I want to see some excitement in the market, and it's time to be short of the market. And if I was long, I'd be selling my long positions.
Well, I think we'll do this in a couple weeks or something. I know, you know, we do stuff on the phone every once in a while, and we're writing on the website every day, but this is something a little different. Maybe it takes a little bit of time to go out somewhere and get all his camera equipment ready, but it's still pretty fun.
Yeah, something different.
Yeah.
Yeah, sounds good, Mike.
All right.
Thanks for having me on the show.